Look, welcome to Terry's Tips, guys. Get a notebook, get a pen. Today I'm going to help you get some money for your business, specifically a business line of credit for up to $150,000, and this is money you can use for anything. So in this video, I'm going to talk about the business line hybrid program. Like, what the heck is that? I got you covered. Number two, I'm going to explain the underwriting criteria, what the lenders are looking for to qualify you, to actually approve you for this money. And then number three, how you can actually apply today. And I will do my success tip at the end. So first, what is the credit line hybrid program? And some of you guys know it as the 680 program. However, there have been some updates. Some of you are not using it the right way. Some of you guys said yes and or no to money, and you did not understand all of the criteria. So this is an update, okay? So listen up. So the credit line hybrid program, if you are a business owner and you have 700 and above personal credit scores, which you either do right now or you're about to, because I'm going to help you, you can qualify for up to $150,000. Now, nugget right here. This is money you can use for anything. That's some of the blessing of this because of the flexibility. So I don't care if you are an author, if you're an MC, if you're a podcaster, if you're a coach, if you have a brick and mortar restaurant, hair salon, daycare, transportation, it does not matter. You can qualify for up to $150,000, and you can use it for payroll, software, lighting, equipment, inventory, real estate, vehicles, like anything that you need for your business to level up. So that's the blessing. Now, with the credit line hybrid program, when you apply for the funding, guys, they're going to look at your personal credit scores. There's the way to leverage your personal credit to qualify for business funding. Now, pause right here. Some of y'all are like, well, Terry, I thought it was business funding. It is. Remember the 3 C's of credit funding, of business credit approvals. That's credit, collateral, and cash flow. Write this down. The 3 C's of business funding: credit, collateral, and cash flow. That means that when you, the business owner, apply for any type of business credit, any kind of funding, the lenders are looking at these 3 areas to actually give you an approval. Now, the blessing, right, what we teach on this channel is that you do not have to be strong in all of these areas. There are different lenders that look at different things. This is high level strategy. On this channel, I teach not only how to build business credit and personal credit, but also how to leverage it, where to go to qualify for the money, and the different things that lenders are looking for, and how to actually launch and grow and scale your business so you're not just getting into a bunch of debt, but actually getting money to leverage to build wealth. Which, if that's what you're looking to do, make sure you subscribe, hit the like button for me. Okay, so for example, I just did a video, I think last week, on 5 steps to get up to $150,000, but that was through payment processors. So that for that video, they were looking at cash flow. If you're a business owner, entrepreneur, aspiring entrepreneur, investor, and you have cash flow, but let's say you have bad personal credit or no business credit, but you do have cash flow, then this is a type of funding, payment processors, that will actually give you money. This program right here, the credit line hybrid program, is the reverse. This is where they're not looking so much at your cash flow, right? Yeah, obviously, it always helps, but they're looking more at your personal credit. So if you have strong personal credit, this is the way to leverage your personal credit for business funding that you can actually use to launch, grow, and scale your business. And then let's talk real quick about collateral, right? Credit, cash flow, collateral. Collateral means that, say you are a business owner and the reason why I say aspiring business owner, because you could be incorporated, but maybe you didn't successfully launch your business, or maybe you need to relaunch your business, right? And so that's why I say also aspiring entrepreneur. Remember, you do not have to be completely self-employed. You can have a full-time job and be doing something on the side and qualify for this money, which then hopefully it does become your full-time thing if you wanted to. Come on, somebody, right? So let's talk about collateral. Let's say you are new to business credit building. Maybe you need to launch or relaunch your business, but because of the kind of industry you have, maybe you have equipment. Maybe you are a personal trainer and you have equipment. Maybe you already own real estate. Maybe you already have like a transportation or a Toro business where you have vehicles in your business name. That's considered collateral. So even for this type of funding, guys, they'll look at your personal credit, and they will sometimes also consider collateral. Let's say you are an investor, you need some more money for your investing, for down payment, for renovations, and maybe you already have 1 or 2 cash flowing units. And you're looking to get 2 or 3 or 4. Well, this is where they'll leverage the collateral to actually help you qualify. So the 3 C's, one last time, adults learn by repetition: credit, cash flow, and collateral. And for the credit line hybrid program, they're looking at your personal credit scores. So if you're a 700 and above right now, you're good to go. But I'm going to explain the underwriting criteria because it's not just a 700. And if you're not a 700, come on somebody, then you guys can invest in a credit jumpstart call where we can help you. And I'll also link a video in the description and the pinned comments on how to increase your credit scores in 5 steps. Got it good? All right, so that's the credit line hybrid program. Now, nugget right here, when you guys apply for it, because why is it called hybrid? You need to know this. Make sure you watch this video in full. Let's say you qualify, you're trying to apply for $150,000 and you don't qualify for the full amount in just business credit. The reason why they call it a hybrid program is because this funding team is super skilled. They help millions of entrepreneurs across the USA get millions of dollars every single year. I've been working with them for years, okay? So this is where maybe you don't qualify for one line of credit for $150,000, but the hybrid means that because they are a funding team, they'll work on other offers for you. So let me give you an example. Let's say you are an author, you wrote a book, and you need $150,000 because you want to hire a virtual assistant, you want to do marketing funnels, you want to have a workshop, maybe you need to reinvest in better artwork for publishing, whatever it is, but you could use $150,000 to scale up your brand. And let's say you qualify and they say, well, no, you don't qualify for that, but we can give you $50,000 in business credit cards, $50,000 in a business line of credit, and $50,000 in a personal line of credit. Come on, somebody, that's still $150,000. The reason why it's called a hybrid program is because you may get other offers. Now, nugget right here, let's say you're presented with an offer like that that's not exactly what you wanted, but it's something that you can still use. You as the business owner, this is where you have the right to say, yes, I want the money, or no, I don't. So you can say, well, yes, I want the business credit cards. Yes, I want the business line of credit, but I'm going to hold off on the $50,000 in personal. That's okay. Let's say I just want to take the business credit cards, $50,000, and I'll make that work. That's okay. So when you apply for the program, somebody on the business funding team will call you back. They will answer your questions and they will give you either a denial if you don't qualify for anything, which find out the reason why. I'm going to go through the underwriting criteria, or they may give you an approval or a counter offer. And if they give you a counter offer, you as a business owner say, yes, I'm about to make that work, or no, that's not for me. And at that point, it's no hard inquiry. What, Terry? It is no hard inquiry at that point. You only get a hard inquiry, guys, if you apply for funding, you get approved for the funding, and you say yes to the offer, which, nugget right here, we're not scared of hard inquiries that result in money we can use to build our brand. If you have 5 hard inquiries and they were all denials, and then your credit score is dropped, you have nothing to show for it, that's a bad day. But if you have a hard inquiry and it resulted in $50,000, $150,000 that's going to level up your entire life, that's a great hard inquiry. Come on, somebody, okay? So you will get offers, and then you decide if you want the money or not, if you want this whole offer or part of the offer, and then you go ahead, and if you get an offer that you want to take advantage of, that's when they'll do the hard inquiry if the lender requires it, and you'll actually get the funding to actually grow and launch your business, okay? Now, let's talk about the underwriting criteria. So you need to have 700 above personal credit score. That's a non-negotiable. Now, why? Because they are funding businesses, entrepreneurs, investors that are high risk to banks, right? The bank is saying no because you ain't been in business 10 years, you don't have 800 scores, you don't have $20,000 a month in revenue. So this is a way to leverage lenders who will actually approve you now when the banks say no. Now, what's the alternative? $0.00. Come on, somebody, right? So because you may have low cash flow, no cash flow, maybe no collateral at all, you may or may not have business credit, that means that they need your personal credit scores to be strong. Nugget right here, if your personal credit scores are not strong, that's not a big deal. Now you set a goal to have your personal credit scores at 30, to be a 700 in the next 30 to 90 days, and you reapply. It's not a big deal, okay? So underwriting criteria, 700 above personal credit scores. I recommend, this is an action item nugget, pull your personal credit scores from Credit Check Total or My FICO. I will put the link in the description of this video and in the pinned comments. Know where you are. Number 2, they're looking at 40% in underutilization. What, Terry? Yes, I didn't say 10%. I didn't say 30%. To actually qualify for this money, they're only looking at 40% and under utilization. Now, if you have high utilization, you're like, Terry, I'm almost right there. That's the only thing holding me back. I will link my video. I got videos for everything you need right here. Come on, somebody. Make sure you share this video with a friend. I will link my video on how to on hacks to actually help you decrease your utilization quickly with less money out of pocket. So the second thing they're looking for is 40% and under utilization. The next thing, guys, underwriting criteria for the credit line hybrid program. No more than 4 hard inquiries in the last 12 months. What, Terry? How many? 4, okay, 4. So why is that an issue, right? They're looking at the fact they don't want you to get over leveraged. So if you're applying for a bunch of credit and you didn't get approved for anything, that's a red flag to them. Well, if nobody else approved you, why do we want to approve you, okay? So if you have excessive hard inquiries, I have a video for that to help you remove hard inquiries, okay? So I will link that. Now, what I will say right here is we're not looking at auto inquiries or mortgage inquiries. Now, why? Because if you go to an auto loan lender and you're trying to buy a car, they may have done 5 inquiries on the same day. That's for like rate shopping, right? So they'll count those all as one. Same thing with mortgages. You're allowed to in the FICO scoring model and even in its underwriting criteria, rate shop for the best real estate financing. So let's say you have 5 mortgage inquiries, they'll just count them as one. Let's say you have 5 auto inquiries, they'll count those as one. But they don't let any more than 4 hard inquiries in the last 12 months. Now, the next thing is 3. They don't want to see more than 3 unsecured brand new loans in the last 12 months. Now, why? Again, same thing. They don't want to make sure that you're not getting over leveraged. A lot of times it's a really huge indicator for a brand new business owner or even a seasoned business owner, to be honest with you, has a whole bunch of brand new unsecured credit. Unsecured credit is like credit cards or other lines of credit or personal loans in a short period of time. That actually signals financial hardship. Y'all, action item. Join our Patreon. You're invited to join our Patreon Wealth Warrior community where I do monthly live Q&A and monthly live workshops at the master's level for a super low investment of only $30 per month. Less than what you spend on Uber Eats and nails and hair and gas and all those things, right? Why am I telling you that? Because I teach high level strategy on all of these concepts. This is a wealth building ministry, okay? So this is why that financial, they don't want it looks like you're going through a hardship when you apply for a bunch of things like that. That's a red flag to them. Part of financial literacy, guys, is understanding how you look on paper to the lenders, okay? So that looks high risk. We have a bunch of hard inquiries in 12 months and a bunch of brand new unsecured accounts in the last 12 months. Now, the next thing they're looking for is no bankruptcies. Sorry, guys, there is other type of funding you can qualify for, but for the business line hybrid program for up to $150,000. Y'all, I got a new dress today. Y'all like it? And I'm a little bit extra because I love dresses. Anybody knows me personally, that's got to be me. So I'm being like a little bit extra. I apologize. You're still getting 6 figures worth of information in this video. Y'all like my dress? Let me know in the comments. So anyway, so no bankruptcy. So that's for this funding for up to $150,000. They don't want you to have any bankruptcies, but there is other type of funding that's okay for. Just not this funding, okay? The next thing is no unpaid collections or charge-offs. I just did a video on pay for deletes. Guys, stop listening to these YouTubers. Don't pay that collection. Never pay a collection. You want to let a $500 Macy's collection keep you from your $150,000 business line of credit? You want to let your $1,000 a Verizon collection keep you from your $150,000 business line of credit? Guys, I am not the popular voice in credit. I am the real voice in credit. I've been doing this for over 20 years. Stop listening to these YouTubers who are just trying to get just trying to get views and just put any kind of garbage out there. This is where high level strategy, if it's a valid collection, you know it's a valid collection. You've been disputing it for 5, 10, 15 years, wasting all of your time and money, more time and money disputing it than actually doing a pay for delete or settlement. We do not let small collections keep us in the way of our big 6 6-figure wealth building money. So they're looking specifically for no unpaid collections, okay? And the last thing is two more things. They also don't want to see in no late payments in the last 2 years, and also they're looking at your current personal credit cards. You will be approved. You'll have a better chance of being approved if you have at least $2,000 and above credit limits or $5,000 above credit limits, okay? And why? Because unsecured business line of credit is unsecured, it's revolving credit, it's credit that you can use over and over and over again. Meaning, let's say they give you $150,000, let's say you only use $50,000, you start to pay that back, that $50,000 becomes available to you again. Y'all, life changing money. So yes, if you don't have a whole lot of revenue yet, you do not own any collateral, then your personal credit needs to be on point, okay? So I hope that helped. I explained what the program was, I explained what they're looking for, I explained some more of the underwriting criteria, and I also explained that they may give you multiple offers and you have the right to actually accept or deny. So how you apply? It's just a link, y'all. Come on. So I'm going to put the link for the 680 program, aka the Credit Line Hybrid program, in the pinned comments and the description. If you even think you may qualify, guys, go for it, because you can have that conversation. Then if you are denied for any reason, find out the reason why you were denied, go ahead and fix it and reapply. It's not that big of a deal. Got it good. And for my success tip, I want you to write this down. Urgent. Matter of fact, if you have gotten to the end of this video, put the word urgent in the comments. I'm going to personally respond to everybody who comments on the video with the word urgent. Why? Because stop procrastinating. Stop waiting. Stop staying at a job you hate. Stop living in an apartment you hate. Stop driving a car you hate. Stop living a lifestyle that you hate. Come on, stop. If you want to move to a house, if you want to change your school district, if you are looking to build legacy and wealth, stop letting small things set you back. Move with a sense of urgency, because if you keep on procrastinating and keep on waiting, you're going to look up, be 5, 10, 15 years, and you never went after your dream. You never started your business. You never retired your spouse. You never bought the house. You never became an investor. You never wrote the book. You never started the podcast. It's urgent, guys. I started my business in 2017 with nothing but a laptop, a cell phone, and a printer. And I had some dark days in the beginning. I was able to leverage my credit, but there's still days where I had a gift, I had a passion, I had a purpose, I had a vision, but I did not know how to be a successful entrepreneur. Now, I have an international brand with 20 streams of income, and I've helped millions of people get millions of money. Guys, it's my part of our wealth building ministry is to help you leave an inheritance to your children's children. That's scripture, right? And so I'm a single mother of 3, and I was able to retire myself at the age of 38. Urgent. If I knew then what I knew now, I would start years ago. My only regret is that I did not get started sooner. The ups and the downs are part of the process. So comment the word urgent, because it is. Your new life is waiting on the other side of you taking action. Amen.